OpenAI's S-1 is confidential, and they just told the world anyway. 2 days from the largest IPO in history, the AI capital markets calendar finally has a shape. Let's get into it. OpenAI publicly acknowledged on June 8th that it confidentially submitted a draft S-1 to the SEC, filed around May 22nd. Last marked at $852 billion post-money, the company is now lining up directly behind Anthropic's June 1 filing and SpaceX's Friday debut. 3 mega listings inside 6 months. Analysts at CNBC and Enterprise DNA peg the IPO valuation above $1 trillion, potentially as soon as September. The terse "we expect it to leak" line was itself the tell. Management wanted control of the headline, not the surprise. The bear case is steep. A $1 trillion tag demands GPT-6 to deliver and enterprise monetization to compound at rates no software company has ever sustained. At those multiples, you're paying for a future with no historical precedent. The forward signal: watch the SpaceX tape Friday. If SPCX prices below the $1.77 trillion deal value, that's the read for how Wall Street will absorb a $1 trillion OpenAI 3 months later. SpaceX prices its 555 million share offering after the close on June 11th and begins trading Friday under the ticker SPCX at a fixed $135 per share. That's a $75 billion raise, scaling to $86 billion if the underwriter over allotment is exercised, the largest IPO in U.S. history. At $1.77 trillion in equity value, SpaceX becomes America's 7th largest company overnight, ahead of Tesla's market cap, with NASDAQ 100 inclusion eligible within 15 trading days, meaning passive QQQ flows are coming. 30% of the deal is earmarked for retail, but allocation at IPO price is, quote, extremely limited. Most retail flow hits the open market Friday. The bear case has a name: Morningstar's $780 billion fair value, a 48% gap to the deal. Pay $135, and you're paying nearly double what an independent analyst says it's worth. The forward signal: if SPCX holds above $135 into Friday's close, retail follow-through and QQQ inclusion carry the tape. Below it, the Morningstar thesis gets a microphone, and that's the read OpenAI's bankers are watching too. Dallas-based AI factory landlord Applied Digital disclosed a 15-year lease with an unnamed investment-grade U.S. hyperscaler for 210 megawatts of critical IT load at its new Delta Forge 2 campus, worth $5.2 billion in guaranteed base term revenue, scaling to $12.7 billion if renewals are exercised. The stock closed up 10% on June 9th. With this single deal, APLD's contracted portfolio crosses 1.4 gigawatts of critical IT load and $36 billion in base term revenue. It's a real economy proof point that the hyperscaler $700 billion CapEx pipeline is being soaked up by neocloud landlords, not just CoreWeave. The bear case: the counterparty is undisclosed. If it isn't Microsoft, Google, or Meta, the credit story compresses fast, and neocloud margins on long-dated leases live or die. Power costs nobody has locked in. The forward signal: watch CoreWeave, IREN, and Nebius pricing into next week's hyperscaler CapEx updates. If those names rally in sympathy, the read-through is confirmed, and the AI factory trade has a second leg. NVIDIA and SK Telecom announced on June 7th a multi-phase plan to build a gigawatt-scale AI cloud in Korea on NVIDIA'S DSX platform, with the first AI factory coming online in 2027. SK Telecom clarified in a follow-up 6K that the 2027 facility itself is not gigawatt on day one. Gigawatt is the multi-phase target. The strategic angle is bigger than the headline. NVIDIA is using DSX as a reusable blueprint for sovereign AI buildouts, meaning every country with a national security AI mandate becomes a potential repeat customer. The pact also commits NVIDIA and SK Group to joint research on next-generation factory architectures. The bear case: the gigawatt target is multi-phase and the timeline is loose. If 2027 slips or launches materially smaller than expected, the sovereign AI export narrative gets discounted. The forward signal: read this alongside the applied digital lease. Both confirm the same picks and shovels thesis. If SK Hynix and Samsung memory orders pick up in the next earnings cycle, DSX becomes a real revenue line, not a press release. Elon Musk confirmed GROK V9 medium finished training at 1.5 trillion parameters, roughly 3 times the size of the current production GROK, with public release targeted for mid-June, the next 5 trading days. XAI also rolled out connectors across enterprise SaaS, SharePoint, Outlook, Google Workspace, Notion, GitHub, Linear, a direct shot at Microsoft Copilot and Anthropic's Enterprise Wedge. The bigger context: GROK 5 is training on Colossus 2 at variants reaching 10 trillion parameters, shipping Q1 2027 per Musk's interview with 36 Crewer. The bear case: XAI's $20 billion Series E was raised on the assumption GROK V5 delivers. V9 Medium is a teaser, not the thesis. If GROK 5 slips or underperforms GPT-6 and Claude 5 head-to-head, the enterprise wedge closes fast. The forward signal: if V9 Medium ships in the next 5 trading days, with benchmark wins on enterprise workflows, the Anthropic IPO and OpenAI S-1 narratives gain a credible third competitor. And that's the bull case for the entire AI training infrastructure stack. The through line today: AI's capital markets calendar is finally tangible. SpaceX Friday, OpenAI next, Anthropic in the wings, while the picks and shovels layer keeps printing real lease revenue. Stay disciplined on valuation. Subscribe so you don't miss tomorrow's tape. This is the Daily Alpha, June 10th. We'll see you tomorrow.